Core's mission is to scale Bitcoin. It is already a high-performance EVM chain that is the #1 leading chain for Bitcoin. And today we have some of the best builders on Core already. My role as an institutional lead at Core is to continue to innovate around Bitcoin solutions to address the needs of our institutional customers. We started with non-custodial staking in April, which gives Bitcoiners a way to earn safe, secure yield without Bitcoin ever leaving custody. We then scaled up and launched dual staking, which allows Bitcoiners to earn higher levels of yield, enhanced yield, by staking Core and Bitcoin, effectively participating in more parts of Core's consensus, therefore earning more rewards. What we're excited to announce at Consensus this week is the next evolution of that product, which is liquid staked Bitcoin, LST BTC. LST BTC is an evolutionary product of Core's non-custodial Bitcoin solutions. And what we're excited about with LST BTC is that now it finally gives Bitcoin holders a way to earn safe, secure yield while their assets stay liquid. And it's thanks to our partners that have made this possible. It's a product that is built with institutional partners for institutional partners. So for LST BTC, we partnered with Maple Finance as the trusted asset manager that ensures the safety of the assets and principal behind LST BTC, and custodians, Copper, BitGo, and Hex Trust, who are responsible for keeping the underlying principal and all their assets secured. And with those partners, it means that for customers of LST BTC, they already work and trust with these partners, and that allows us to release a product that is secure, liquid, and provides yield that can be fully integrated into the existing institutional framework on day one. That's a great question, right? Because the underlying elephant in the room is that Bitcoin doesn't earn yield. So how do you stake Bitcoin to earn yield? At Core, there's no new trust assumptions around Bitcoin. It was designed specifically so that Bitcoin can be used as utility in order to secure Core in exchange for yield. As a simple example, it's like this. If you can take Bitcoin and effectively lock it up in your own safe, right? Set a timer, and that's safe. Nobody else can access your Bitcoin. What you're doing with Core in order to participate in consensus is to take a little sticky note, write a message that says, I'm securing Core, voting on these validators, and here's my EVM reward address to send me Core rewards. And that's really it. No one can access your Bitcoin while it's time locked. And Core, on the other hand, has a relayer that is scanning the entire Bitcoin blockchain for these sticky notes that are valid consensus. And then we take Core rewards that are emitted every single day over the next 81 years, and we distribute it to those Bitcoin holders. There's no new trust assumptions here. You're not taking protocol risks to Core. You're not trusting your private keys and giving it to someone else. All it is in that same example, you safely lock your Bitcoin away with a message to participate in Core consensus in order to earn Core rewards. And that mechanism is the foundation of how yield is generated for Bitcoiners, and is the foundation on top of which institutions like Valor has been able to launch a Bitcoin yielding ETP on top of Core. And we believe from the next wave of products that we're able to launch, including LST BTC, that set of foundation is how we've been able to work with so many institutions to effectively turn Bitcoin from a passive, non-yielding asset into a productive one. And that productivity, we think, is going to unlock billions of dollars in new capital efficiency around Bitcoin. Yeah, Bitcoin is still the best store of value asset. And also for investment managers, Bitcoin has been the best returning asset for the last 10 years. That's never going to change. At Core, we want to help make Bitcoin more productive, all while retaining the same security framework and ethos around Bitcoin. And so when you think about what I just mentioned with the LST Bitcoin, that Bitcoin asset remains with the custodian, principal protected. All we're unlocking is now the utility through having full liquidity of an asset that can be moved around, traded, or held safely within custodians. And the use cases that unlocks, quite simply, especially for institutions, right, there's three. You can continue to hold this asset that generates yield, the LST BTC, with your custodian. But more importantly, if you're borrowing against that asset today, if you're borrowing against BTC, now you can borrow against an asset that earns yield. If you're pledging that asset as collateral to trade on exchange, previously it was earning negative carry through custody fees. Now that same asset through LST BTC is generating returns while you're doing the exact same thing. So for institutions, it's a game changer in terms of unlocking capital efficiency, but also where I think the evolutionary step for a lot of institutions is now having the ability to generate cash flow from Bitcoin, right? And that means asset managers that look at Bitcoin in previous terms with passive that doesn't earn yield, it's very much a risk asset. But now, if it does have cash flow, it fits within the same construct as traditional financial, investment managers, where you look at stocks or bonds or even stable coins with yield, and now you can have Bitcoin in that same framework with an allocation that generates cash flow, and that we think is going to unlock tremendous amounts of new capital inflows, new institutional market participation. And when you think about all the use cases of Bitcoin around the world, that is what I just mentioned for institutions, an extremely powerful unlock. But also, when you think about what it means for emerging markets, being able to hold Bitcoin as a store of value, but effectively being able to build a Bitcoin savings account where Bitcoin now earns yield, where you can use it to borrow against, where you can effectively pull additional revenue streams out of Bitcoin as the asset. That is tremendously exciting for the rest of the world and for the entire crypto economy and crypto industry as a whole. Yeah, listen, everyone is going to have their own perspective of where Bitcoin stands. Right? But as we've seen, Bitcoin now has a history. It's been around for over 15 years as an asset that's been some of the best performing or has outperformed some of the highest growth stocks in traditional finance. You've seen Jamie Dimon go from looking at Bitcoin as this go to zero asset to now an integral part of the investment thesis as well as the traditional financial industry. We've now seen Bitcoin ETFs become the fastest growing ETF products ever. And so institutional adoption is here to stay. And when institutions come on board, that is a direct signal that there's now scale. And as we're seeing, reserve banks add Bitcoin to their treasuries, that's another indication that this asset is not going to zero. So while there'll always be naysayers, regardless of what asset class, be it Bitcoin or something else, right? We're focused on making Bitcoin more productive. We're focused on addressing real-world use cases that create unlock that is going to make Bitcoin more accessible for people, but also make it a much more productive asset that fits within both the existing framework of financial market infrastructure, as well as unlock new use cases in Bitcoin DeFi, unlock new use cases in consumer finance, as well as use cases that we probably aren't even thinking about today. Core is about safety. It's built for Bitcoiners by Bitcoiners. It's built by institutions for institutions. Everything we're doing keeps that in mind, from the 81-year time horizon of the block rewards emission schedule, all the way to the core security principles behind non-custodial staking. It has always been to keep Bitcoin secure and don't jeopardize Bitcoin safety.